Hello, everyone. I'm Scott Talbott, EVP at Electronic Transaction Association, and welcome to another episode of Transaction Trending, our podcast where we speak with payments experts on trends and issues shaping our industries. Today's episode is talking about B2B, and I'm very pleased to welcome the three co-chairs of the ETA B2B committee to talk. Let's dive right in. First, we have Raghuram Adiraju, who is head of U.S. Commercial Acceptance at MasterCard. Raghu, can you tell us and set the stage for today's transaction trending, talking about what is the current B2B payments landscape and the growth potential in B2B payments?
Thank you, Scott. The B2B payments landscape is evolving rapidly, driven by the need for greater efficiency and the need for better experiences across the ecosystem. If you look at the evolution, over the past 10 to 15 years, we have seen a significant investments and growth on the buy side, where issuing community and fintechs have looked into how do we help enable buyers to make their payments more efficiently and how do we evolve their experiences. Whereas on the accounts receivable side, on the supplier side, that has gained traction in the last, let's call it 3 to 5 years. This lag has created a disparity. But the market is now recognizing the need for a more balanced ecosystem. And as a result, we're seeing an evolution of players, new players coming in, more fintechs, ERP players, procure-to-pay systems. Everybody stepping up with innovative solutions. And these range from digitizing financial solutions, enhanced payment reconciliation to straight-through processing, and holistic treasury solutions like CFO in a box. Right? And this brings us to the market opportunity. The global B2B payments market is estimated around $110 trillion, of which $26 trillion is US alone. But within that, about $10 to $12 trillion of that is still handled manually via check payments in US. And when you look at other markets, the cash and check components is significantly higher, right, from a percentage standpoint. This represents a significant opportunity for digitization. And we hear and see a lot of that in the mid-market companies where there is a higher need for efficiency, cost reduction, and enhanced security and fraud measures. But it doesn't stop there. Another critical factor for all of this, along with all of this, is a changing workforce mindset. We're seeing more and more millennials stepping up into the C-suite roles, particularly in the mid-market organizations. And they are digital first from a mindset standpoint. And so they are scrutinizing AP/AR processes and driving digital transformation initiatives so that it can move away from the antiquated processes. Collectively, all these factors together, B2B payments landscape is ripe for an explosive growth and is ready to digitize trillions of dollars with numerous solutions and players striving to create a balanced ecosystem, enhancing both AP and AR experiences. I'm excited for what's about to happen in the future in the B2B world.
Great. Thank you, Raghu. Next, we have Abhishek, who is the Global Head of B2B Acceptance at Visa. Abhishek, can you, if we consider digital transactions of payments, where do the growth opportunities lie and how is the industry moving?
So as Raghu just mentioned, right, I think it's a massive opportunity in market. I think if you look at what's happened in the B2B space, right, there has been an evolution, and that evolution has happened over last several decades. There was a point in time where somebody would actually, take a paper, put a credit card below it, and actually, scratch it so that the card number on the invoice could go and be made a payment, right? Those are the days where we started off from. But I think, so there has been huge innovation, and there has been huge innovation driven both by the demand and need for services, both around simplicity, automation, and convenience, right? And cost as well. But on the other side, there has also been this, great focus because of the market opportunity from a lot of the fintechs and established players to come in and innovate. whether it's the innovation around, virtual cards, whether it's innovation around provisioning on your phone, where, if you're actually going in and you have a new employee, right, they can actually buy their ticket or make a purchase, and the company can actually just provision a card to them right on their phone. So there's a lot of innovation around it. On the AP side, right, there have been now automation solutions that put in place that really drive complete hands-off management of AP, from automated invoice payments, right, to the AR side, which over the last, I would say, 5 years or so, has really seen an increased focus. How do we actually help the supplier? How do we actually help them in their business around working capital? And I think all of these collective innovations have really driven the address of the need in the market around a more efficient, cost-effective method of helping businesses manage working capital. And if I look at that or relate it back to the opportunity that we talked about largely that exists, right? I think now the industry is coming together. If you look at Europe, for example, there is a big push around standardization of invoice formats, right, to really drive efficiency. If you look at Asia, for that matter, right, it's actually, again, increasing straight-through processing. How do we make payments more efficient? And there are now players that are stepping in, including ourselves, to actually say, how do we actually make this space more easy, that addresses the needs of both the buyers and suppliers, who are really the ones doing business and help drive commerce around this whole digital transformation that's going through the ecosystem.
All right, thank you, Abhishek. And our final co-chair is Perryn Holtrop, who is an ETA CPP and CEO and founder of PayNation. Perryn, question for you is, what challenges do acquirers face with rapid change in adopting new innovation solutions to allow them to keep pace with the demand among the growing trends in virtual and seamless payments acceptance?
Thank you, Scott. A real good question. My esteemed colleagues here, Abhishek and Raghu, just kind of laid out for you the innovation that's going on behind B2B and the tremendous opportunity there. And with tremendous opportunity, you have a lot of people who are trying to get a piece of it. So one of the challenges for us as an acquirer is just trying to navigate through all the different companies and technology and everybody that's trying to get into this space. Some products better than others, some stuff that doesn't work, some stuff that's great but hasn't been really flushed through. And so we, if we're not building our own stuff, we're partnering with companies that have these supposed good solutions. And sometimes it's very hard to navigate through it. Another problem that we see a lot of times is some of these companies that are building some of these solutions to really leverage B2B acceptance are not payments people. They're software guys that say, hey, I want to get into this space and I want to make money off this. I know there's $111 trillion worth of money to be made, and we want a piece of it. And it becomes a little bit difficult to navigate through. There are a lot of really good companies out there. Raghu and Abhishek are part of companies that really reach out to us as acquirers and make known the technology that's out there and really work with us to try to understand the market better. I think the other challenge is a lot of times these types of products, especially on the when we're talking about virtual card and those kinds of things, it's typically targeted to really big enterprise. And middle market is I think the place where a lot of opportunity lies, where people seem to forget about. And what we do is we spend a lot of time in the middle market space, educating clients on what the advantages are. You have those companies that are in the middle market space who want to be at enterprise at some point, and showing them some of the products that some of their enterprise colleagues are using, and just educating. So I think getting the information that's out there, there's so much of it, and then trying to disseminate it to where we can make it more palatable for the end user is a lot of times the challenge. But we're doing it, and it's working, and it's growing, and really excited about the space altogether.
Thanks, Perryn. So you mentioned challenges. So Abhishek, let me switch back to you. You talked about a lot of the positives, and nothing is perfect. So can you talk about some of the barriers to entry And then after that, or barriers to adoption. And then after that, can you talk about some of the advantages for straight-through processing for B2B companies as a follow-up?
Yeah, sure. I think there are, I would say, three themes around this, right? I think the first one is around education. And I think for the longest period of time, right, the entire industry is focused on the buyer and the benefits that the buyer receives, right? And globally, we've been fueled on this, incentive-driven program where, a lot of the cost from the supplier is actually passed on to the buyer in the form of rebates, right? So there is this value balancing that is happening across the industry. And I think that's kind of one point that has come up. The second is around, the value proposition for the buyer is really clear. It's automation, it's efficiency, it's control. But I think the benefits for the supplier are A, very less understood or little understood, and B, more importantly, not much work has actually gone about A, trying to understand the value that a supplier receives, but B, more importantly, educating them on what those benefits are, and then across the ecosystem, right, actually helping articulate those benefits. The fact that, a supplier today, when they're receiving payments, irrespective of the rail that they use, right, have challenges across collections, challenges across efficiency, challenges across, reconciliation. They actually have working capital costs as well. A lot of them can be addressed and actually significant value offered from commercial payments as an alternative working capital rail. But we just haven't focused on them. So I say that's kind of one big bucket. I think the second part of it is that, some of the great benefits of some of the newer innovations, such as virtual cards that exist, right? When you look at the experience from the supplier side, those benefits may not translate to them, right? Virtual cards are a great automated way from the buyer, but they actually make it a fairly manual and, broken process on the supplier side. And that's where innovation is really coming through. And to your question around straight-through processing, that's where straight-through processing is now becoming important. Again, ACH is straight-through process. What do we really mean by straight-through processing? People think about bank transfers as straight-through processing. Actually, they are not, because it's not just the money being deposited without any manual intervention in the supplier's bank account, but a very critical step of that is actually also helping them reconcile those payments to close out their Cash App and open invoices in the ERP, right? I'll say something that most people don't like is that actually for the longest period of time, checks were the most straight-through processed for a supplier. Why? They never actually saw a check. It went to the bank, it got keyed in, they did a pro forma, uploaded it into the ERP, and they closed out, right? So that's kind of the experience that a lot of these suppliers are used to. I know we hate checks, but the fact is that that's kind of the automated experience, and straight-through processing is really the one where now virtual cards with their redundant information, the invoice add-on, right? We are now saying, how can we actually take that and automatically close out invoices and help suppliers actually manage and reduce their investments and costs around resources for their AR side. So that's, I think, a big part of, the challenge around for, helping penetrate into this space.
That makes sense. And Perryn, let me flip back to you for a second. Can you share, you talked about some efficiencies and challenges. What are those biggest pain points or efficiencies that still exist in the B2B payments that would need to be addressed, that should be addressed?
People, I always make this joke. There's still bigger companies that are writing credit card numbers on a piece of paper, right? You have people that are still taking credit cards over the phone. Abhishek talked about straight-through processing. You got companies that are receiving these virtual cards by the hundreds, and they got somebody that's opening every email and pulling the information out and entering those information in. So, the double, triple entries, you hear a lot about embedded payments or integrated payments. You got clients and companies that are still, logging into several different platforms, creating an invoice here, entering a payment amount over there, when there are solutions out there that can help and automate all of that. And so Abhishek mentioned education. That's the biggest thing. Like when we're out there selling, we're selling by education. We're explaining to everyone, these are some of the solutions out there. But you'd be surprised how many companies out there are still writing numbers over the phone on a piece of paper, and not using the lowest form of technology that's out there. I think that people get so used to we're human nature. We just don't like change, right? We get used to doing the things we do it, how we do it. And it takes some time for people to see that there's a better way. I think that everyone has a breaking point at some point, and it requires, someone like us to come in and say, hey, look, these are some of the ways that we can make things better. Things will eventually get better, but, I would say double, triple entries, and people are still taking checks. I often joke that, when we're looking at checks and ACH, it's like VHS and DVD, right? Digital payments is the streaming version of payments. So we got to get back. No one's watching DVDs and VHS anymore. So we shouldn't be taking checks and ACH when there's better solutions out there. That's personally my opinion.
Sure. Now let me ask a question to all of you. And so what are some of the key benefits for accepting virtual cards and straight-through processing? Raghu, maybe we'll start with you on this one.
Sure. At a fundamental level, and Abhishek and Perryn kind of touched on this, right? It's about working capital, right? To start off with, oftentimes there is a financial benefit, right? How soon can you get paid? How late can you actually make your payment on the buy side, or how soon can you get paid from a supplier perspective? Then you have the automation component of this, right? Whether you take an ACH, whether you take a check, how can the process be automated in terms of when you have an individual that is in an accounts receivables department, they are oftentimes doing some sort of manual effort, whether it's related to accepting a payment or whether it's related to the data reconciliation that Abhishek and Perryn talked about. How do you automate that, right? So that becomes a benefit too when you look at STP and virtual card aspects of it. Between both these two things, right? These are the biggest advantages, right? That I would talk to, and then hand it over to Abhishek and Perryn to talk a little more.
All right. Thanks, Raghu. Abhishek, Perryn, any response?
Yeah, I think so. The biggest kind of benefits for on this is, so we've done research, right? So we actually sponsored, Forrester to conduct an independent research on this topic. And for the first time, right, they actually went out and spoke to enterprises, about 150 enterprises, billion plus in revenues, right, to really understand what is the value from commercial card acceptance. And the answers actually surprised all of us, right? It's not a dime or a basis points here or a nickel there, right? A corporate receiving payments actually receives twice. Okay, think about it, twice in benefits than they actually pay out in costs. And so what are all these benefits that they actually receive? They span across incremental revenues, efficiency, reduction in working capital costs, float benefits, which is working capital, reduced collections cost, right? Increased receivables. So all of these benefits, which are not really quantified regularly, actually start adding up. And we've had some tremendous conversations with some of the largest corporates recently when we've actually used these drivers to say, have you thought about it in this way? I'll give you an example, which is that, people think about, accepting card payments as a cost. But if it helps drive incremental revenues for you in an additional sale, right, at a 30-40% margin, you can very quickly cover off your costs, right? And especially if you offset from the sales commissions that you pay. So it's kind of this thinking and articulating of these benefits, which actually truly accrue to the supplier. And I think that's a critical unlock that we need to do, not to really push our products or solutions out there, but I think it's actually a really valuable tool that the corporates are missing out on leveraging in their toolkit.
Yeah, and I would add, in the world of payments or getting paid, we always talk about DSO. Everybody wants to get paid quicker. If you have somebody that's willing to pay you faster, with a virtual card, let's say, and you can process that card and get paid. You're getting paid a lot faster. People don't understand the time value of money, right? If somebody owes you $2,000 today, it's not worth $2,000 in 30 days with inflation and everything else. You got to get paid quicker. The barrier is always price, right? And if you're leveraging, AP with AR, and you got somebody that's giving you a rebate, and may offset the cost that it takes to receive a payment, and you're kind of, I want to say double dipping, but it's far less expensive to digitize your payments than to accept a payment or send out a payment because you think of price. I mean, I really don't understand sometimes how people will wait 30 days, 90 days to get paid by a check because they're so afraid of fees. And when they can get paid today and have that money in their account tomorrow and move forward. It really baffles my mind when you have, especially some of these middle market companies, even on the smaller side, where everybody's complaining about not getting paid. I'm not getting paid. People don't pay me. Chasing money is the hardest part. Like, there's ways to get paid quicker. Let us show you how to do it. And then it always becomes a little bit of a rub. So, back to what we talked about earlier, it's really education. And, when we have these basic conversations with clients, they're like, oh, you know what, that makes sense. And it's just having that conversation. But again, it's just taking the time to really educate the end user about the solutions that are out there.
Right, perfect. Well, that brings us almost to the end. One last question for all three of you. Any final thoughts on what we can do to help boost acceptance of digital payments? Closing remarks?
I would say kind of the theme here is education. It's really, for us as acquirers is to really understand and learn the products that are out there, working with the Raghus and Abhisheks of the world, titans in their space that bring us these great products that they're innovating or partnering us up with other client or other partners that can show us the other products they have, and then understanding those solutions and really educating the end user, and really just taking the time to explain that we are in the 21st century here. We are streaming our payments.
Thank you for this fantastic conversation. If you enjoyed this robust conversation, you can meet Abhishek, Raghu, and Perryn at our upcoming Transact Tech in Atlanta on November 14th. And then again at Transact Tech Latam on December 3rd in Miami, where B2B will be discussed. I also invite you to join our B2B and other ETA committees that meet regularly to discuss pressing industry issues. They're doing great work exploring great topics within the B2B space, like surcharging, managing risk, and other topics such as the ones we've discussed today. Participation is open to all ETA members. Thank you for tuning into this episode of Transaction Trending. Till next time, this is Scott Talbott signing off.